I want to quickly talk to you about business loans, and it's important to understand that when you think about business loans, you have different types of business loans. You have different conditions. You have a different eligibility criteria. You have different lenders, and most importantly, you also have different terms and conditions. So, in today's conversation, I want to really go back to business loans and really explain to you this year what type of loans you have to really apply for, why you should apply for it, and which business lender to actually consider. Okay, it's important to understand that if you're a business owner, whether you have a startup or an established business or anything in between, you always have to think about the specific small business loan that you want to apply for. Okay, and it's important because before you apply for a business loan, you got to really evaluate your needs. Maybe your business just needs 100K, or maybe it needs a half a mil, or it needs a mil. It needs a million. So the amount that you really need will have an important, let's say, an important impact on which lender will accept to lend to you, and also the repayment window. Okay, so it's important to really understand that when you go to an online lender, there are some preconditions, some pre-established conditions to actually know. If you go to a traditional lender, such as a bank or credit union, there are some pre-established conditions, and it's the same thing for alternative lenders. Okay, so that's what I want to talk to you about in today's. That's what I want to really cover in today's conversation. One thing you need to really understand here is that when we think about small business loans, we're not just talking about term loans. Most business owners think of small businesses as small business loans, and they think automatically about term loans. But no, you have other types of small business loans. You have working capital loans. You have revenue-based financing, such as invoice factoring, accounts receivable financing. So you have a variety when it comes to small business loans, okay? And you have equipment financing, and there are some loans that are pretty specific to the use of loan proceeds. Like some lenders will give you a loan just to cover payroll. Some lenders will give you a loan just to weather financial storms. Lenders will give you loans to expand operations. Okay, as a matter of fact, you even have SBA loans that you can use for a lot of other things. Okay, so you do have a diverse base of loans. I will talk about that in the next session. So when you think about small business loans this year, you have to really understand that besides term loans, you have business lines of credit, you have SBA loans, you have merchant cash advances, you have equipment financing, among others. Okay. I'm not going to talk too much about term loans because everybody knows term loans. Okay. Because the term loans are basically loans that allow you to have a fixed repayment term, right? Fixed interest rates and monthly payments. Those are the loans that we used to have back in the days. I mean, we're still having those, but from banks and credit unions, from traditional lenders. A business line of credit is a little different because it works the same way as a credit card. Is the only difference is that you have access to cash. The money is not tied up onto a plastic. No, it's cash. So it's cash that's wired to your account, or it's cash that that's already in your account and that you can tap into it. Okay, so this is cash that you can like when you think about a business line of credit, think about ongoing access to capital. Okay, so a business line of credit in that sense is actually good for you when it comes to managing short-term cash flow needs, or even better, unexpected expenses. Okay, so you can also get those business lines of credit from credit unions, from traditional banks or online lenders. Sometimes you might get a business line of credit from an alternative lender too. Okay. Now, SBA loans give you much more flexibility in terms of the amount you can get, but also the repayment window. Like an SBA loan can actually give you up to 25 years to repay the loan. And it's only and also 5 million, by the way, 5 million maximum. It's only because an SBA loan is guaranteed, okay, prominently by the US government. So the SBA guarantees up to 80% of that loan. So you, as the borrower, you only are on the hook for 20, 20% actually. Okay. So, but the conditions for approval when it comes to SBA loans are a little different than other loans because the federal government is involved. So the conditions are stricter. Okay. So besides those three, you can also have merchant cash advances. Merchant cash advances are what I call revenue based financing because they actually look at your future accounts receivable. Okay, so as opposed to accounts receivable factoring or accounts receivable financing, which look at your past receivables. Okay, your current receivables. So that's something to really think about. So when I say if you think about getting a business loan this year, it's always important to go back to square one. Go back to square one in terms of assessing your needs, right? And the question is the reason why you want to evaluate your needs. The main reason is that you want to ask yourself, do you really need a business loan right now? Do you need, and also, what type of business loan do you really need? Because when you evaluate your needs, your operational needs, by evaluating your needs, you have the answer to the question, which business loans do I need, if any? Okay. And when I say assessing your needs, it goes beyond evaluating the type of loan that you want. You also need to determine the loan amount. And this is not something to be taken lightly, though, because maybe you have a cash shortage. So you're thinking about applying for the maximum. Okay, or you think that you want to apply for the minimum. Either way, you need to apply for the right amount of business loans so that you're not over leveraged, you're not so leveraged. Okay, that's important. When we talk about leverage in the business funding space, I'm talking about your debt to equity, your debt to equity ratio being too high. So if your debt to equity ratio is too high, meaning you are borrowing too much versus how much money you have put into the business, that's really bad. And lenders pay attention to those ratios. By the way, they will calculate those ratios to see what's really happening in your company. Okay, so you want to determine the loan amount and make sure that you have like what I advise viewers and clients to do is to actually apply for 125%, not more, not less. And the 25% extra is a buffer just in case because things might happen. You do not want to apply over and over and over. You want to apply once and that's it. So that's something to think about. You want to identify the purpose of the loan. Okay, why you want to why do you need a loan? Do you need a loan to expand your business, cover expenses during a slow season, or finance a specific project? So think about that. So if you want to apply for a business loan this year, it's really important to understand that you got to have the right essential documents, right? The right paperwork. So first of all, you got to have the business information, and you got to have also some financial statements. For the financial statements, it's a lot easier if you are using an accounting software tool such as QuickBooks or Zero or Wave or NetSuite or others. I mean, because all you have to do then is just to print out those documents from your software, and that's it. But if you're doing things manually, if you're keeping your books like in Excel, like in spreadsheets, that's really not good because the process will not be efficient. I'm not even talking about errors, okay? Because anything manual is actually prone to human mistakes. We're all humans. We're all imperfect. So it's just better to have accounting software. So when I say a business information, I'm talking about you providing to the lender your business's legal name, your address, and contact information. You want to provide an overview of your industry, and you want to specify the number of years your company has been operating, right? So this is just because lenders want to see what kind of proven track record, if any, you have. And if you have partners or investors, you likely need information for each owner of the business, okay? You also want to explain the purpose of the loan and how it will contribute to your business's growth and success. And when I say financial statements, I'm talking about the your top three, your three primary financial statements, or if you have time, you prepare the four, because the three most important ones are balance sheets, income statements, and statement of cash flow. Now, there is a fourth one that a lot of business owners don't know, but it's optional. It's actually the statement of owner's equity. Okay, lenders actually like to have that also because it gives them some kind of context about the business. So if you have it, that's fine as well. And so just make sure your financial statements are accurate, up to date, and prepared by a certified public accountant. And if you don't have a CPA, consider hiring one to prepare your financial statements. Yeah, a CPA can also provide valuable advice on improving your financial performance and increasing your chances of getting approved for a loan. So this is something to really think about. You might need to have also a business plan to explain your business further. You might need to have also tax returns for the last 2 to 3 years. So your 1065, your 1120S, or your 1120 for the last 2 to 3 years. So this year, if you want to be approved for a business loan real fast, it's important after you evaluated your needs and also gathered your paperwork. It's important to assess your loan eligibility. The reason why is that different lenders have different eligibility criteria. Even within the same industry, within the same space, you might have different eligibility criteria. Like two banks, say Chase or Truist, might have different eligibility criteria for business loans. Okay, so it's important to really take this on a case by case basis. So once you identify the loan amount that you want to have I would say a general idea about your preparedness. Okay, so your eligibility. This means what? You want to check your business credit score. You want to check your PayDesk score, your Dun& Bradstreet PayDesk score. You want to check your Experian business credit score. You want to check your Equifax business credit score. And usually, your business credit score, especially the PayDex one, goes from 0 to 100, with 80 being a good number. So anytime your PayDex credit score is above 80, you are in good hands. Okay. And you also might want to take the time to check your personal credit score, because that tells you whether or not you are on the right path. Because some lenders don't care about your personal credit score, but those who do care about your credit score, you want to make sure that you have something portable to show to them, right? I mean, ideally, when you apply for a business loan, you want to apply with your EIN so that your personal affairs are really preserved, actually. Okay, and so that's kind of cool. So when I say credit score, personal and finance, that's important. You want to think also about your time in business. Okay, so lenders like to have businesses that have been around for a while. You want to think also about revenue and profitability, right? So lenders actually tend to care more about revenue and profitability than anything else. Okay, so that's why they will ask you to provide your business bank account statements or other information like your income statements, your cash flow statements. Okay, cash flow statement is important. Your debt to income ratio, kind of similar to your debt to equity ratio. Okay, your DTI ratio is important, as is your leverage, your DTE. Okay, but also in some cases, the lenders might be interested in the kind of industry you're in too. So if you're thinking about applying for a business loan this year, you need to understand that unlike business credit cards, unlike other types of business funding program, like even business grants, business loans have multiple advantages. Like you have access to capital, and in some cases, you might have access to capital within 24 hours. You have a lot of lenders on the market, especially alternative lenders, that pride themselves on providing capital to business owners within 24 hours. Okay, So that's kind of cool. So you're getting cash real fast. You have flexibility also in loan terms. When I say flexibility, I'm talking about the repayment window. I'm talking about the payment frequency. I'm talking about the your ability to negotiate things like APR, things like repayment window. Once the loan process is actually in full force, you have the possibility to also build business credit. Now, building business credit is important, but not all lenders will care about that. Lenders will only care if you don't pay your loan back. But if you are just paying as usual, everything is going fine, they don't have an incentive to actually report your data to business credit bureaus or personal credit bureaus. It is in your interest as a borrower, as a business borrower, to report your data to the likes of Experian Business Credit, Experian Business, Equifax Business, and Paydex. That way, you can gradually increase your credit score, and you can use that credit score in the future for other stuff. Okay, so this is important to look at it from that point of view. You got to look at the tax benefits. You got to also pay attention to the fact that with a business loan, you are actually retaining ownership because small business loans are non-dilutive. Okay, so as an entrepreneur, you can access capital without sacrificing ownership. So those are the pros that you can have with small business loans. What about the drawbacks? Let's talk about that. First of all, when you think about small business loans, of course, you are speaking about debt accumulation, right? So you got to be very careful in terms of how you manage that debt, how you navigate the debt process, so that you don't have to, that you're not in the end, you're not really settled with too much debt. You also got to think about collateral requirements. Some business loans will ask you for collateral. I mean, in this economy, especially during COVID, a lot of business lenders were asking for collateral because they weren't sure they will be repaid. So if you have no collateral, it's important for you to think about the fact that your business loan application process might be a little tougher. I mean, a little more complex. Also, you got to think about the interest rates and fees. So some lenders will charge you fees and by the way, there is a difference between APR and interest rates because APR actually takes into account interest rates, but also the other fees. Fees such as origination fees, fees such as early payment fees, prepayment penalties, all those things. They actually get into the final calculation for your APR. And also with small business loans, depending on the lender, you might find that some eligibility criteria are stricter than others. Okay, and also having a small business loan will have an impact on your cash flow, especially if you have to repay the loan within within a short amount of time, like within 18 months or 12 months, or if you have to give access to your banking records to the lender, and the lender has to debit your business bank account every single day to get paid, for instance. So, in conclusion to this conversation, I spoke to you about business loans this year. I give you a nice overview about the whole conversation, understanding small business loans, the types, how to evaluate your needs, and what you need to apply. Thank you so much. God bless you. I will see you next time. Until then, remember, stay marvelous.